Hello, everyone. Happy Sunday. This is Simon with AvaTrade. Welcome to our weekly webinar. And what we do here is actually, as the title says here, mapping out your week ahead. In simple words, we're trying to create a plan. And I always like to quote what traders like to say: you plan your trade, and then you trade your plan. And why is it important? As you know, every aspect of our life, we spend a little bit of time on planning. It could improve the results. Doesn't guarantee, of course, but could improve and definitely removes the aspect of chaos, the aspect of impulsivity, and just doing things on the go. And in trading, it's very, very important to have the structure, to have a plan, and to act according to that. Few things about myself. My name is Simon Friedman. I'm a senior account manager with AvaTrade. June of this year will be 24 years since I started my trading career. I started as a prop trader on Wall Street in 2000, the year 2000 June. And I traded for about 11 years as a prop trader. And after that, I think I had enough of that excitement and intensity of the day trading, and I moved on doing different things. Of course, involved trading. I also started to educate and mentor traders, and currently I'm very happy. I have a great opportunity to work with our customers at AvaTrade. The agenda of the webinar is the same as we do every week. We talk a little bit fundamentals, technicals as well. We go through indices, stocks, commodities, FX. We try to see what's waiting for us in the week ahead. As far as economic calendar, we'll go through that as well and try to create the plan. Risk warning, you can find full statement at avatrade.com. And of course, everything we do here, it's purely educational. We do not suggest any trades. These are the channels, social media channels of AvaTrade. You have Telegram, you have X or X Twitter, and YouTube. As I always say, it's my favorite. You have a lot of information there, a lot of material, a lot of tutorials. And of course, the webinars are being recorded and posted. So if you think that you missed one, don't stress. If you did miss one, definitely don't stress. You can just go to our YouTube channel and look for the webinar, and at your convenient time, you can just watch it, and it's available. If you are watching this on YouTube, please, if you like it, don't forget to click the likes. If you feel like you want to share it, feel free. And definitely, please write your feedback, your criticism if you have some. And it's very important for me to improve things as we go. So your feedback is very, very important, right? Okay, so the market. Okay, the last week we spoke about things that happened. The previous week we had Powell's press conference followed by a decision. Then we had jobs edit and unemployment level. And we did have a nice run this week. So we'll take a look at the charts in a few moments. The markets are running up. US markets had the third consecutive week to the upside. European market, German market went up to the new highs. The same thing happened to the UK market. So it looks like there's a lot of strength in equity markets. Also, we had some moves in commodities we'll take a look at. And of course, the Forex, the US dollar, Japanese yen is in focus. And we had recent decisions from Australia and UK, which was no change. We'll take a look at those as well. So this is the article. You know, sometimes I like to bring the screenshots from the articles. You can find it on marketwatch.com. So the title says here, Dow 40,000 is so close, you can feel it. Here's why you should fear it. And it will bring us to economic calendar momentarily. We have a very important event coming up this week, and that the CPI numbers. So as you know, every time the Feds are speaking, the Powell being drilled with the questions, it's pretty much the same narrative. They say, okay, it's all data dependent. We are doing everything possible to bring the inflation down. And as data comes in, we make decisions pretty much. So since last comment, as I mentioned to you last week, what happened there, we got a clear signal that there's no interest rate hikes coming in, and the table is pretty much open for the cuts as long as the inflation is reducing or being reduced, and there's an environment for the Feds to start cutting the rates. So the market took it in a very positive way. Then we have employment data was supporting the Feds and so on. So now this is the first serious data since the last statement, and the market is really waiting for that. And the hope, of course, is for inflation to show another decrease, and that would mean that the cut rates or the rate cuts are coming soon, according to what priced into the market. So definitely it's very, very important. Now, a few words about the economic calendar, especially for new people. You can find it on our web trader or the mobile app. Also, there's a lot of providers of economic calendar. You can just Google it. It's all public information coming from the same source. You can know it ahead of time and prepare yourself. Some people ask, is it important to use it? Is it important to know about it? I think it's very important to know about it for a very simple reason. You don't want to be caught in a surprise move on the market when the NFPs are coming out, or interest rate decisions coming out, or the CPI data that comes on Wednesday. Definitely you will see spikes in the market up and down. And, if you prepare it, you can make intelligent decision. You want to get into the trade, you want to get out of the trade, you want to stay out until things settle. It's totally up to a trader, but I think it's important to know about the upcoming events, especially the series ones. Okay. So here I take, as usual, I take the high impact events only. You can filter again through them. You can choose what's relevant to your trading. Let's go through it really quick. Monday, we have inflation expectation from New Zealand. Tuesday, we have employment data from UK and PPI numbers from US, which is also very, very important. And Wednesday is a key day. I would say the most important announcements coming on Wednesday. We have GDP numbers from European Union, and it's all about CPI from US, as well as retail sales. Very important. Retail sales from US are also very sensitive data. We'll definitely take a look how market reacts, but especially and priority goes to CPI data that comes on Wednesday. We have a report for the last Bank of England monetary policy that also comes on Wednesday. GDP numbers from Japan. Japan is in focus big time, and it's a lot of it related to yen. We'll talk about it when we get to Forex. Thursday, we have employment data from Australia, and we have industrial production and retail sales from China on Friday. So these are the things that we are expecting to watch, and definitely we'll see the reactions of the market. Okay, we'll move on into the trading platform, and just to take a look generally, as you could see here, if you take weekly chart and you take S&P 500 as a general global equity index, if you want to call it, it's very diversified. A lot of companies within it doing business internationally. So we had 3 consecutive weeks. So you could see here, this past week had a strong move to the upside, and we are on the way trying to recover the losses. Take a look, the 3 weeks before, there were extended losses there. And now this is the daily chart. We come to the point when we are facing resistance here around 5,245.46. Take a look. We came to this level here, first March 12th. Then we had a run up, then we came right back, and we played with this level, and now we back there again. So very important to watch. Of course, it's all data dependent. It can change in a split second. Hypothetically, we could have a great results on the inflation. The inflation fell down tremendously. Market is going to take off, making new highs. Everything is possible. The opposite scenario, of course, the inflation doesn't give up, or it doesn't want to disappear, and that would disappoint the market because the Feds would really prolong the action in cutting the rates. So that's kind of a big picture, and that's why there's a big weight going or laying on that decision, or not the decision, but the numbers of the CPI. And I'm not getting tired stressing it out, because when those numbers coming out on Wednesday, we'll definitely see a move up or down, because now we hear, the Feds are ready to do things, and it's nothing new. It's all data dependent, as they said, but now it's a lot of pressure on them, and it's a lot of pressure on this number coming up on Wednesday. Now, let's take a look at China really quick. As we said, we have some numbers coming out this week. China is trying to recover. As we mentioned, this 12,500 we went through. And after this tremendous move to the upside, it was a strong move. We just went above the 12,500 and we closed higher. And now we are trading in the upper portion of this candle. So technically speaking, it could mean that we move higher from here. They are trying, the government's trying, they're doing all the efforts to revive the economy. So we could see a potential move higher in the Chinese index there. Japan is not doing that great. I mean, we did have a move up all the way to the week of March 17, and since then we've been really sliding, and a lot of it to do, of course, with Japanese yen. And the Bank of Japan, I think they're in a tight or tough situation. Recently, as we know, we went from negative rate to 0, and they did few interventions, and they're trying to bring yen to some strength, but they're having a hard time, and there's a potential decision to increase interest rate, or there's also potential to more interventions. We'll talk about yen when we get to Forex, but as you could see here, the Japanese index is having a hard time going higher, and that uncertainty what's happening with yen at this point. It did have a nice run to the upside on the weakness of the yen. Now there's potential actions or measures to bring the yen higher, which potentially would reflect on a Japanese index in a negative way. U.S. indices, as we said, we started with S&P 500. Here's Dow Jones. Dow Jones had a very strong week, the strongest out of 3. And we'll take a look when we go to individual stocks. Banking sector helped a lot to move Dow to higher levels here. And as you saw in the slide, we are approaching 40,000 here. Last time we were there, it was end of March. April was a sell-off, and now slowly we're approaching that level. So financials are in play a lot, and the reason being that they're really getting excited about potential interest rate cuts of the Feds. So that's Dow Jones. Nasdaq, we did have a nice recovery here. This is the weekly chart. You could see that 1 week of 14th of April, it took us 3 weeks to recover from that. So as you could see, if you turn on the logic, it takes 1 week to drop and 3 weeks to recover. To me, it doesn't look like a very, very strong sign. But again, everything could change in just that one number that comes in CPI data on Wednesday. Meanwhile, we are facing resistance here. That's where the sell-off started in the mid-April, and we are at the same level. You see those tails, we're trying to move higher, but closing pretty much on Friday was pretty much a flat day. The open was 18,231 and the close 18,243. 12 points were gained on NASDAQ. Now we said that Germany and UK, they had a nice run. We just closed in a brand new territory, all-time highs for DAX. What's next here? Usually, if we break the previous highs, the instrument tend to return and retest that level and establish a strong support. So we might see a move to the downside from here and show that, okay, we did break through that resistance that we were at the end of March, and now we're setting up support, and then we're ready to go higher. Or we could just have an impulse and just fly higher, which there's no references that we don't have any resistance because we are in the all-time high territories here. Or the third scenario, we could break through it, and that would mean a fake breakout, and we would start build resistance here and continue lower. So that's on DAX. UK also on the weakness of the pound and potential. I mean, last decision was no change, but there's a potential interest rate cut. Sorry, coming up. So as you could see, the UK FTSE has been running nicely to the upside. We had 3 consecutive weeks with the gaps moving higher, and the only thing that Friday candle it doesn't look so promising here. We are at the all-time highs, but we didn't close at the highs. We closed somewhere in the middle of the day range. So similar to DAX, we want to see what's next. Are we continuing here? Are we going to retest and look for confirming support? We'll find out soon, I guess. So that's the story. Our indices, again, we had the nice run, 3 consecutive weeks across the board, Europeans, US. China is doing well. The Japanese index, the only one kind of behind. Okay, individual stocks. I want to start with Disney and Teva. So Disney reported not such a great news as far as forecast, and the stock went down. As you could see, there was a serious gap to the downside. But the good news, I just did some research here. Someone by the name James Gorman, who happens to be CEO of serious financial institution Morgan Stanley, he just bought, after this recent drop or the drop this week, he bought around 20,000 shares. It cost him about 2.1 million. He had to report it, so he reported to SEC. And as of now, this is official. He owns 20,467 Disney shares. So that's something to pay attention to. Disney disappointed, right? They say things are not so great, or they're not going to be so great, but there comes someone and spends 2.1, and it's not just someone from the street, someone who's running a very serious financial institution called Morgan Stanley. So I think on Monday we might see some moves, because it's similar to when you hear the Warren Buffett buying something, maybe not on the same scale, but definitely would inject some positivity to it. So we'll be watching Disney definitely the upcoming week. Sometimes when the gap down is happening and some good news coming in, we might see an attempt to close the gap. We'll find out what's going on. Now, Teva. I like Teva, and I've been talking about Teva pretty much a lot. And if you remember, especially for new people, I just want to go through it really quick. We spoke about Teva when it was doing this zigzagging between 7 and 11, if you remember, and you've been coming to these webinars regularly. We've been talking about it, and every time we came close to 7, we said, okay, it could be a good opportunity to take it up again. And then as we started really steadily moving, we broke through 11, we never came back below. And then if you remember, we spoke about some analysts setting up a target price of $19, $20. So what happened in Teva? as you could see here, there was a recent kind of a correction here, and it came right back. And after this move, 3 consecutive days to the upside, we had consolidation here, getting ready for the move up. And guess what? They reported the earnings, but mostly the move happened because they just reported. I think they're in the third. First of all, the revenues came better than expected, and we know Teva is a generic pharmaceutical company, but they're also focusing on new things. So now I'm just going to read it from here, quoting the news here. In a separate announcement, Teva disclosed results from a portion of its phase 3 study trial of TEV-749 as schizophrenia treatment for adult patients, saying it met the primary endpoint as measured by the change in the positive and negative syndrome scale total score compared to placebo over an 8-week period. So this sounded like a good news, a potential I mean, the whole idea of new things being developed in pharmaceutical companies is getting an approval later of Food and Drug Administration and start producing those drugs. So they are in the third phase, which is serious, getting close to that final decision. And I guess investors like that. And take a look. This happened on the 8th. We went from 14.5 to 16, 15, $1.5 move, and then we continued. So definitely that projection that was shared of target $19 totally achievable. And if you look at the monthly chart, we spoke about it that slowly we needed to break through 11, then we needed to break through 14. Now it's 16 and a quarter almost. And next stop could be $19, $20. And as a huge potential, let's see when, I don't know if or when we get to that level. Let's see how the stock of Teva behaves at those levels. So definitely worth watching, and continue watching the Teva pharmaceutical. Now, a few other things. Let's just take a look at the banking sector. As I mentioned, that's what helped actually Dow Jones having a nice move to the upside. I think recently it's been stronger than S&P and Nasdaq. So it looks like the banking sector is getting strong there and anticipating the potential interest rate cuts. So here's your Goldman Sachs. Take a look how many months we went, 7 months consecutive to the upside. Super strong. JP Morgan, we are not at all-time highs, but getting there. It used to be the opposite. JP Morgan was leading. If you remember, they were buying those trouble banks and other things. As a leader, they looked very good up till here. Then we had a move to the downside. And so it's kind of behind Goldman Sachs currently. Citigroup is also challenging these levels here. We're trying to break through this resistance of April 1st. Bank of America as well. So big hope among the banks for that interest rate cut, and they are acting very, very strongly. And just to show Dow Jones again, has been contributing to a pretty much strong move in Dow Jones index. Let's take a look through the Magnificent Seven. How are they doing there? Meta, if you remember, we spoke that we might see the closure of the gap. It looks like it's happening there for Meta. Netflix as well, close the gap. The question is what's next? The moment we close the gap, the question, will we continue higher or will we come back to the supports where the sell-off stopped? And again, this week, CPI data would definitely move the markets one way or another. Apple. We had a nice recovery recently. We're still far away from highs in Apple, but recent moves were pretty good on the earnings and less disappointing numbers and new things coming up. A big thing happened here that they are focusing on AI, and the China numbers came less disappointing than expected. So we did have a nice recovery on Apple. So far, we do need to challenge. If we decide to go higher on Apple, we need to challenge that initial move to the upside, which was almost $187. We'll take a look at that. Amazon also is playing with the double top here. We'll see how this week plays. Tesla is weak again. We did close that last gap to the downside. The question is what's next? What's in the sleeve of Mr. Musk? Do we get some new updates? Do we go lower and retest the recent lows? That's a big question. Google, also since this gap, we did try to correct, and we are sitting the current levels. And I think, again, I keep on repeating myself, this week CPI gonna make it or break it for the market, definitely. Microsoft, after the recent choppy trading, as you could see, a lot of gaps happen up and down. We are sitting right on a 50-day moving average here. Again, we'll see how this week plays for Microsoft. So just to summarize the stocks, we did have a sell-off on Disney, and CEO of Morgan Stanley just bought 2.1 million worth of shares. Teva is moving nicely higher, trying to reach those predicted targets of $19 and $20. Banks are strong, and the big stocks are retesting the recent resistance, and this week is crucial with the CPI numbers. Now, let's move to commodities, and of course, oil is in focus. A lot of it to do with the situation in the Middle East. The reactions were both ways. First, there was a reaction that Hamas agreed to the peace agreement, and then they said it didn't happen. So I think this was the move on the 8th of May. We moved lower and then we recovered. But then Friday, there was a sell-off again. So we'll see how the week starts. A lot of it to do, of course, what's happening in the Middle East, the situation. Either it's getting more peaceful or it's getting more intense. We'll find out in the upcoming week. Gold had a nice move to the upside. You could see here, we are above that 2,333 that we were playing with for a while. We had a nice move to the upside on Thursday, continued on Friday. Let's see if we manage to go higher and challenge the highs, or we're going to sell off again below. Copper had a nice move, but to be very cautious here. We did break the recent highs, but we just came right back in. It looks like we took all the steps and then the sellers returned. So still this recent high is remaining a challenge. Again, a lot of it to do is with Chinese recovery. As we went through the index, remember, Chinese index is trying to recover. So we're still holding this uptrend. We'll continue watching copper as China moves, either continues higher, so it's good for copper, or if we go to downside correction, we might see a sell-off in copper here. Palladium, we've been talking about palladium here and there, the 950 level, they play with that level a lot. You could see a lot of actions around here. We came below, then we had a nice move in the beginning of the week, then we came to retest it, and then with a nice spike touching 1,000 again, and came back again. It looks like similar to what copper did in a way. Huge spike to the upside. Let's take a look. Same thing, huge spike to the upside and retracement. So we'll watch palladium. It looks like that 950 level is holding here. Let's see if we continue higher from these levels here. Natural gas continues to show a strength. Again, for new people, I just want to go back to what we spoke about, kind of cycles here. 2016, 2020 and we came to 2024, 4-year cycles. We did start the move from here. A big move started 4 years ago around April, May, June, July here. And now the second month to the upside. Since we start talking about it, it looks good. Again, no guarantees. We can easily sell off here. It's a very sensitive instrument and it has a lot of aspects that affect it. So as of now, we are holding nicely with the recent gains. The weekly chart, we pretty much 4 weeks to the upside. We'll continue watching. On the daily chart, we are approaching 200 moving average, which could be a test, and see what's next. Okay, that's natural gas. Cocoa. Cocoa is cooling down. We had a nice sell-off here from 11,700 all the way to below 7,000, 6,985. And then we recovered some of the move. And tricky one. Again, just people that are not familiar with cocoa. There was a physical, or still is, a physical shortage of cocoa in West Africa, a lot of it to do with the weather. And that caused a tremendous move to the upside. Take a look. This was January. We were at a little bit above 4,000. We went all the way to 11,700, almost triple the price. So we'll be definitely continue watching cocoa here. Is this temporary correction before we move lower on, or this was a strong sell-off, the profit taking, and we continue higher? I guess we'll find out soon. So that's cocoa. Also, we spoke about sugar. Let's take a look how it works out here. On sugar, we are feeling here downside pressure, but we're still not breaking that support here. So the low of this range here was 1908, and that was end of April, and the top is about 2012. So we are ranging here. It could be that we continue lower, and we'll see how we act around $19 here. That's sugar. And the grains, we spoke about it, that there were some benefits for the producers, as there's tax benefits as corn and soybeans being used in aviation fuel. So since then, we had a nice move to the upside in both corn and soybeans. They are continue to look strong. Soybeans had a little bit of a sell-off the past couple of days, but the wheat looks very, very strong. We just broke on Friday about this resistance from last year in December. It looks very, very strong here. The question is, what's next? Definitely worth watching wheat over here. As I mentioned to you, the moment we break the strong resistance, we might come back and retest this level around 649, 650. And if wheat is ready to move higher, we might see some price action above the 649 and setting up for continuation. And of course, the opposite scenario, if we just dive back below 650 and start building resistance again, we might see correction to the downside. So those are the grains, and that concludes our commodities reviews. And let's move to Forex. We'll start with dollar index. Dollar index is trading around 105. To take the weekly chart, we had some nice move here, and then the previous week we had a sell-off, and this past week it's pretty much flat. And again, I'm going to be repeating the CPI number is very crucial, and that if the numbers, logically speaking, again, if the numbers are higher than expected in inflation, that means the Feds are not really going to cut so soon, and that's good for dollar. So we might see a nice recovery in the US dollar. The opposite scenario, if the inflation numbers are showing the weakness or inflation is being reduced, we might see a sell-off in US dollar. So as you could see, dollar is kind of waiting around these levels. What's next? The majors, the key levels, as you remember, we spoke about the pound is around 226. The channel is here within 200 pips, 226 and 228. We've been ranging, and then the moment we fell off that channel, we've been showing the weakness, and we're sitting on the daily chart right on 200-day moving average. So a lot of this weakness was caused, if you remember, I mentioned Deputy of Governor Bank of England. He was very happy the way inflation works itself, and they said that might see the interest rate cuts coming soon. We just had the decision with no change. So some are predicting the end of summer, beginning of fall, the first interest rate cut from UK. But then again, it's just thoughts, nothing in stone. So we are sitting right on a 200 moving average here, and also waiting for what's happening this week. For Euro, 108 is the key level. We're still below that level. We also right between 50 and a 200 moving average. Also here we have something that called dead cross, when the 50 moving average cross below 200. Some analysts and chartists look at it as a possible signal for sell-off. So as long as we are below 108, they are holding this. If we approach a 108 level, we might be having a little fight, as usually it happens around these levels between the buyers and the sellers. And again, the CPI numbers would definitely move this instrument one way or another. Here comes the yen. As you could see here, this was a combination of the weakness of the dollar and also intervention from Bank of Japan. Slowly, we've been stepping up here, as you could see, steadily recovering 1, 2, 3, 4, 5, 6 sessions to the upside. The question is, what's next? We have some numbers from Japan coming up. As I mentioned to you last week, the governor of Bank of Japan is kind of comfortable with these levels of interest rate. That's what he said. That's what I figured out from the whole presentation that I couldn't understand. And let's see what's happening this week. Again, they are very famous with doing these interventions. In a lot of cases, they're not successful. The instrument goes right back where it came from. In some cases, they are successful. This last intervention looks like it held a little bit. Let's see what's happening there. USD CAD had the recent moves as the oil fluctuates. Again, to explain, a Canadian dollar, sometimes it's very sensitive to the price of oil, as Canada is one of the producers of oil. So the oil prices affect Canadian dollar, not always, but in a lot of cases. So you see these spikes up and down there. Australian and New Zealand dollar, they show a little bit of strength, especially with China showing the strength. As I mentioned to you a few times, that Chinese data is very sensitive to 4 major instruments. That's the oil, copper, and 2 commodities they're called, 2 currencies they're called commodity currencies, which is Australian dollar and New Zealand dollar, as those countries are selling a lot of goods to China. So this is Australian dollar. We did try this 0.6632 level in a way, here, and then the kind of a third top here, third major top. We are so far failing to go higher. Let's see what's happening this week. New Zealand dollar as well has a nice recovery there. It's been super, super weak against the dollar, and now it's trying to recover here. So that's as far as New Zealand dollar. Swiss franc regaining some strength. You remember the Swiss National Bank's the first major central bank that cut the rates. So they started that path, recent path of cutting the rates. So initially there was a weakness of Swiss franc. There was all this move, and then recently we tried to recover, sitting right on 50-day moving average, and also on the strong level of possible support, or establishing a new resistance before we move lower here. We'll find out. Now, also important to mention ZAR, the South African currency, as we're approaching the elections. Today's the 12th of May. I think elections are happening on the 29th. So we have a little bit more than 2 weeks Elections are tricky things, so I'm not going to go into politics and the economic situation in South Africa, but as you could see here, into the election, starting the end of April, the ZAR or South African rand gained some strength, and guess what? We're sitting on a very serious level here. We went here in the beginning of April, the 9th of April, the low was 1840. We are right there again. We came the prior week, we came to this level, tried to run higher, we came right back. So this current level is very important. We could easily break and go lower, and that would show the strength of ZAR. But you could see here, a lot of accumulation happened in this channel between 1840 and 19 plus. We're having 3 consecutive weeks to the downside. So it's important to watch and see what's happening. Definitely, the last days of the election, we should see intense moves here. And of course, after the elections, when we know who's in power and what's the policy and other things, we might see strong moves or significant moves in South African rand, up or down. I guess we'll find out. So that's it pretty much with the Forex. And let's take a quick look at Mr. Bitcoin. You remember that I mentioned to you that this financial institution, as of April 30th, they decided that ETFs of cryptocurrencies are not considered collaterals anymore. So that really, I think it started somewhere here. Yeah, the last week of April. We came all the way to 56,500. Recently, we had some recovery. We came to the top of this channel here, around 65.5. And now we are closer to the bottom. So we have this channel between 5,000 and 6,000 in volume. And I guess we'll find out, do we have any fundamentals? Do we have a sell-off? Do we have a recovery? A lot of hopes of traders, including the big investors. If you remember, Cathy Woods is head of this huge fund managing billions of dollars. He has big hopes for Bitcoin and cryptos in general. And a lot of investors are waiting for that magical move to 100,000 and higher. At the same time, there's a lot of skeptics there. And that's the beauty of the market. We have 2 camps, positive and negative. And I guess we'll find out what's next for Bitcoin. We are below 50, we're below the 100 and still above the 200 moving average here. But technically speaking, we start making lower lows, lower highs, which technically would mean the change of trend to the downside. And I guess we're approaching 60,000. Currently, we're trading at around 61,000. Okay, so please don't forget about social media channels, Telegram, X, and YouTube channel. If you're watching it on YouTube, please subscribe. It's pretty cool to be subscribed and click on that bell because you'll be notified when new things are coming in. Write your comments, write your criticism or good things, whatever you feel like it. And it's important, like I said, I'm trying to improve things. We're all trying to improve things and benefit our customers better. And put it all together, I think in one sentence, even one word abbreviation, CPI is the key word for this upcoming week. And as I said, it's either make it or break it. Again, lower CPI numbers, lower inflation numbers would potentially cause the market to run, US dollar to sell. And the opposite scenario, of course, the sell-off in the market, dollar gets strength. Japanese yen to watch, Disney and Teva to watch, banking sector definitely to watch, and in general to watch the results or the reaction of the market to the CPI data. On the currencies, South African ZAR is in play due to the upcoming inflation elections. I want to wish you a successful and productive week. Enjoy the rest of the weekend. Get some energy. Get ready. And all the best. God willing, we should be back next week. Take care.